Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so I have Bill Bymel on the line, and he's CEO and founder of First Lien Capital. Bill, welcome back to the show.
Hi, Adam. Good to see you again.
All right, Bill. So I'm excited to talk about, we got a lot to talk about today. So the upcoming book, we got to talk about your new fund. We got to talk about obviously the podcast that you have. I mean, we got a whole lot to do here today, and I'm excited to get do a deep dive on what's been going on in your world again. But before to start this off, we'll start this episode the way that we start them all with our Mission Matters Minute. So, Bill, we at Mission Matters, we amplify stories for entrepreneurs, executives, and experts. That's our mission. Bill, what mission matters to you?
The mission that matters the most to me is making a difference in the lives of families and individuals, especially those with small children, families trying to raise in today's society.
It's awesome. Love bringing mission-based individuals on the line to share why they do what they do, how they're doing it, and really what we can all learn from that. So great to have you back on. Mm-hmm. And I guess just to get us kicked off, I don't want to assume that, all of our new listeners caught some of our previous work together. So we'll keep it kind of high level, but tell us a little bit more about your background and how you got into finance and entrepreneurship.
Sure. I mean, I grew up in South Florida, went to NYU Film School in the 90s, thought I was going to be a filmmaker and actually did go on to make a number of films. Took a little break from that in 2002, moved back to Florida to get into real estate. It was a business that my father had been in. It was very comfortable to me. I had known, the most millionaires in the world made their money in real estate. And obviously all high net worth families all have some portion of their portfolios invested in real estate. So I got into that 20 years ago, actually, and now I've been investing in real estate and then had the opportunity about 14 years ago in 2008, the last time there was a market downturn, I had an opportunity to become involved in purchasing non-performing and sub-performing residential home loans. I got a steep discount because the banks were going bad. And when I got into that business, we created a whole new paradigm around debt collection, one where, our mission really was to help families stay in their homes and keep their homes if possible. We saved hundreds, if not thousands of people from foreclosure over the last 14 years. And in doing so, made a very nice return for our investors along the way. And that's kind of what I've been up to the last 14 years and why I founded First Lien Capital 2 years ago to continue that mission.
Yeah. And I want to go further into, I want to stick on this theme and I want to go further into First Lien Capital and something that you said really about keeping families in their homes. One of the things I saw is I know you got quite a bit of branding and people and shout out to whoever's doing your social media and other things. Cause when I looked at your LinkedIn recently again, I saw it had some updates and I see this big old beautiful win-win. Going across it. When I saw that, I'm like, oh, well, that's great messaging. And I've known you for a while now, so I know how you're doing what you do and the ethics behind it and the idea that you want to help families, stay in their homes when possible and to create win-win situations. And now that your branding says it, I'm like, all right, I got it. I see you, Bill. This is good stuff.
That's right.
So tell us a little bit more about what that concept means to you and really how you're doing that.
Yeah, and you and I met right after I wrote this book, Win-Win Revolution, which was what brought us together because I was a young author. This was my first book. And I wrote this book about 6 years ago now. It's an insider's guide to investing in the secondary mortgage market. The idea being that when we got into the business of debt collecting, when you're buying mortgages that are in default, no one wants to be a debt collector, right? Mm-hmm. And what we have found is that, especially over the last 14 years, so many people got caught up in a mess of a mortgage situation. Mm-hmm. Mortgage servicing was really an industry that was not well managed as well. So when you take all of that into account, when we came into it, and what the book is about the paradigm we created 14 years ago.
Mhm.
If somebody can afford to stay in their home and we can lower their interest rate and modify them, we're private equity dollars. We have the ability to do things that banks and regulated finance companies don't do. So as a private investment firm, we really have a lot more flexibility. And what we found is over the last decade, we found that some of our best returns come from buying mortgages at a discount that are in default, working with borrowers to keep them in their home, and then either keeping that mortgage paper or selling that back out into the secondary mortgage market.
Yeah.
And that's really the entire thesis behind how we've operated within a market where, that would normally be very susceptible to, vulture funds or people that are just looking to buy mortgages and foreclose on people to get the housing. We really do take a different approach, and we've led the way within the industry. We have many of my competitors in the space. They give my book to their staff in order to teach them how to, the right paradigm for operation.
Yeah, and just to maybe take it a level deeper on the opposite of that, and we don't have to pick on any particular company, but like, what's that concept of like a vulture fund or somebody that just wants to go in there and foreclose? And the reason why I want to bring this out is because there could be even people that watch this at some point that think all companies maybe have that kind of operation, which you're not doing it like that. But just to kind of elaborate a little bit more, like, what does that mean?
It's a great question, Adam, and it's not just. There are companies out there that are in the money. Corporations in the capitalism world that we live in are designed for one thing, and it's to make a profit, right? Yeah. So many of the private equity funds and firms that are out there, they go in looking to, you've seen it illustrated in books and in movies like Wall Street, where they go in and they don't always do what's best for the people involved in the transaction, the borrowers, the people that work at companies. They buy stuff for pennies on the dollar, and to make their best profits, it sometimes means taking that property back. What's the most efficient way to just maximize your profits? And so many vulture funds would be the kind of funds that would come in and buy these packages of mortgages in the hundreds of millions, and buying hundreds, if not thousands, of mortgages at a time. And they have a very systemized bureaucracy, and they create a box by which the borrowers have to fall within guidelines that if a borrower can meet XYZ criteria by XYZ date, then they can save their home. And a lot of people just, the real world doesn't operate that way.
Yeah.
And it's not even really intentional. Look, the big banks are just as guilty of bad servicing practices as anyone, and it's not necessarily vulture funds that are intentionally vultures. It's that they're buying hundreds of millions. They're dealing with hundreds, if not thousands, of files at a time. They create systems in place. They don't hire enough staff to really to handle it, because obviously they're looking to make the most profit. They do the very basic minimum to service the portfolio in such a way that's compliant, but it doesn't always it doesn't necessarily serve the needs of all those borrowers that need individual workouts. So what we tell our investors and our cohorts is that we manage the trees and not the forests. While many investors in my field are looking at large portfolios and creating systems that people have to follow, we invest hundreds of millions, but we look at each case individually, and we listen to each case individually. And that's how we avoid the kind of systematic vulturiness that happens with these kind of investments.
And the other part of this, as you're saying, I just want to make sure I understand it correctly, is that some of these banks, it's not even like that they want to do anything bad on the borrower. They're just not set up for it. Like well-meaning, good working people, and people that, they go to work thinking every day they want to help people, of course, and their heart's in the right place. But if you're a big bank or you're set up for it, it's just the systems. Like you don't have time. You can't make a call on one loan versus another. It's like what box is it in, and you move on. Am I off on that? I just want to make sure I understand.
You 100% hit the nail on the head. That's exactly what I'm trying to say, is that while maybe there is a 20% of the industry that is really sadistic and vulture-y, and they're only out for the money. There's another whole 50% of the industry, which now creates a majority of the industry. The other 50% of the industry is so big and so bureaucratic that it just can't get out of its own way. It doesn't mean any harm, but it has only a set number of options to choose from. And to give you the perfect explanation to take this one step further, more than about half of the residential mortgages in this country are actually owned by the American taxpayer, by these quasi-governmental organizations such as Fannie Mae, Freddie Mac, Ginnie Mae, FHA loans, VA loans, ag loans. Those make up about half of the $12 trillion residential mortgage market. And so who do you go to for a decision on something like that? They have to have systems in place because there's no other way to operate when you're dealing with trillions, if not in billions of dollars. And the bureaucracy itself is what gets in the way of helping homeowners. And so that's what we've done a little different. We can go out and we can invest, $100 million or $200 million, which I know sounds like a lot of money, but in the world of mortgages, it's tiny. It's it's dozens of loans, maybe a couple hundred mortgage loans. And we can work with those borrowers to get them back on track or to exit these properties with dignity. And that's what we do over and over again, creating win-win resolutions on a weekly basis.
Yeah. And so the idea of, and just to get a feel for this. So when you talk about using private equity dollars, you mean exactly that. So that means you have let's just say everybody, including yourself, somebody has some type of matrix or ways or ideology that they're making decisions on. But based on you working with, like as you mentioned, hundreds of loans and having these private equity dollars, you're able to better figure out what the best scenario is for both your investors, of course, that want a healthy return on their investment, but also if there's that other side of the win as well with the homeowner maybe being able to stay in the home or other things like that, or whatever's the best resolution for them. Like either way, like both party can potentially end up better than they would otherwise.
Absolutely. 100%. And so I started with my own money, and I have a partner, and then we had friends and family, and then we got together with some larger family offices, and it started with $1 million, and then it became 10, and then it became 60, and we've got about 63 million that we've invested in the market just in the last year. And I've also overseen this now for, on an institutional level at my prior firms to the tunes of hundreds of millions. But there is always a win on both sides. I have had scenarios where I've bought a $400,000 mortgage on a condo in Florida that had dropped so much in value that the condo was maybe worth $250,000, $300,000. And I was able to go back to that borrower, and this was a second home for them. They stopped paying because they didn't see how they could ever get out from underwater. They were retirees. They didn't want to be throwing good money away. And I said to them, listen, if you want to keep this condo, let's make a deal. So that $300,000 condo, they owed $450,000 to us, and I sold them back that note. I basically gave them a discounted payoff, a DPO or SPO, short payoff. They bought back that note from me for $250,000. Wow. So they saved $200,000 of debt. Well, we just wiped that away. They got a free and clear condo. I obviously bought that mortgage at an even better discount than $250,000, and we created a win-win resolution. So, we look for stuff like that all the time. And, it's as private equity. So we pool together private equity dollars. Anyone that's an accredited investor in America can subscribe to one of our private offering memoranda. We also have family offices, billionaires and millionaires that have invested with us that are our partners. Some of them invest 10, 20 million at a time. It is a very cash intensive business, obviously buying and selling mortgages, but you can be a player in the industry for, a couple $100 million, and you can really make an impact on society as well.
Amazing. I want to jump around a bit here. Now that we kind of set the table. Now I want to jump around here a bit. So first off, I want to talk a little bit about this book. So we're not going to go too far for everybody watching this. Just to let you know, we're going to be bringing Bill back onto the show. We'll do a deeper dive. But just high level, what are some of the things that you plan on presenting in the upcoming book?
So the next book, I'm writing a chapter. It's one of your books. Remember, we're bringing together some other colleagues in the industry. I'm glad that we're finally, partnering up this time. And when you first came to me with the idea, it was actually a while. It was a year ago, but by the time we really sat down and said, okay, we're going to be releasing it at the end of this year.
Yeah.
I wanted to. It's a real estate book, and I'm a real estate guy, and I really try to stay ahead of trends, especially when you're buying non-performing debt or you're trying to model, where the future, how are housing prices going, plus or minus. You really want to stay on the cutting edge of where the markets are. And right now, Adam, the markets are in, when you talk about financial markets and liquidity markets, so bond markets, securitization markets, the kind of markets where mortgage loans are traded, those are becoming less and less liquid. There's a lot of cash leaving the system. A lot of this is brought on by the fact that the Federal Reserve has raised interest rates so quickly in the last 6 months. We've never seen a 3-point interest rate hike in such a brief period of time previously. So there is dysfunction in liquidity markets right now. There's a rise in interest rates that's staving off demand. The intention of the Federal Reserve is to cut back on inflation. And so inflation being the number 2 bad boy in the system. So what my chapter really is about is where we are today and where the next 12 to 24 months will look like for residential real estate, commercial real estate, the residential real estate and finance markets. It's really meant to bring a macroeconomic perspective, to the fact that markets are just cyclical and we're on the way, we're on a turn, we're on a cyclical turn right now.
Well, okay, I'm gonna pause to that one there, and we're gonna do.
I don't want to give away too much.
We're gonna do more on this one, just not today. That's what we call a teaser, everyone. But I got one that we can give them today, and that is the real estate lowdown. Come on, man! I'll tell you. I know I don't know if I was pulling your leg in the beginning. Like, come on, Bill, you got to do this. This is gonna be good. But in all seriousness, I'm just so excited to see the way that the show is turning out, the way that it's progressing. And for those that haven't had a chance yet to listen to it, highly recommend. We'll be putting the links in the show notes so that everyone can just click on the link and head right on over. But how do you feel? Other side of the mic, Bill.
It's great. It's great. It's first of all, having the Mission Matters. I'm doing a plug for you. Having your team behind this is really what's made it so wonderful of an experience. I couldn't imagine, it takes enough just to develop time and put the content together, but then to deal with the production and the distribution aspects, which your team does so well, and then advising us as new podcasters with, just the training and support that you give us. It has made it a very good experience. And I really feel it's so interesting because I never really listened to podcasts until I started doing a podcast. And now I'm starting to realize.
It's interesting the way that works. It's true.
But it's so funny because I've been, what I found with podcasts is you can really get, you get a range of topic and you get depth. And one of my big complaints about television today, especially when you look at the major news networks, is that they're all saying the same 3 things all the time and just regurgitating. If you want any kind of in-depth story or any reporting, you got to watch BBC News or something like that. But what I'm starting to realize is that more in-depth kind of look at topics is where is in the podcast realm. That's where you're seeing even major newsmakers, Pulitzer Prize winning authors and and people that have talk shows, they're going to podcasts to actually do in-depth reporting and in-depth storytelling. So it's really been amazing. I have so many more people that I am looking forward to interviewing. I love my Real Tidbits concept, which is the idea of sharing certain terms of the real estate and mortgage finance industry as the podcast episode topic to kind of get in depth with that. So it's been really fun, and I'm just proud of the fact that I think I've done 21 episodes.
You're over 20 episodes. I saw that the other day, and I'm like,
to get there.
It's like you're all grown up, Bill. I don't know. You're a grown up podcaster now. It's awesome. You're out of your teenage years.
Was it you that said that stat, or Matt? So it's like the majority of podcasts never get past the 20th episode. So
yeah, it's true. And it's interesting, and I'll tell you, it's fun to watch the shows grow, specifically as well. Your show, I mean, it's fun to see it because you see it when it starts, and you have, we all have ideas as creators, right? We think we want one thing, but as we mature and we kind of go further and further on that journey, whether it's podcasting, it's blogging, like whatever anybody watching this that likes to do, but this just happens to be podcasting. Right. It's fun. It's fun for me to watch the content evolve. Maybe just to give the audience a little bit of a flavor of what to expect when they do go over there and visit and subscribe as well. What kind of topics? We know real estate, but let's go a little bit further. What kind of topics are you?
Yeah, sure. I mean, so there's two types of episodes in my podcast, and one is the interview episode, and one is the Real Tidbits episode. Real Tidbits is really me talking about a specific area of the real estate industry. For example, one of my Real Tidbits episodes was cap rates. What is cap rates? What do you hear people in the real estate investment world talking about cap rates, which is short for capitalization rates? It's a very important term because it's really the bar by which you can refer to the pricing of investment real estate, investment grade real estate. So, the amount of cash that you would expect to capitalize back upon based upon the purchase price of a property. And when it comes to buying a drive-through restaurant where you're owning the land and renting it to McDonald's, that cap rate, if McDonald's is paying you $100,000 a year, and what are you willing to take that at capitalization wise? So I get into the depth of individual terms in real estate, and real estate mortgage finance as well. So it's meant for whether you're a layman investor or more advanced. But then I also am interviewing people in the real estate business. And what started out as I'm only going to, I've got folks that have been in the business for 40 years, guys that, in really unique areas of the business, like my partner, Nate Werner, who's a tenant rep broker for restaurants like Olive Garden, very unique niche business. But I'm also interviewing newer people to the business. So the idea being getting to the humanity of all the various types of humans that are involved in real estate, either as a full-time or part-time business. So I've got a woman that's she got into real estate and mortgage note investing simply so that she could stay at home and be a mom to her kids as opposed to a 9-to-5. And so that broad range those are the types of things that you would find on my podcast.
Oh, that's awesome. And so any interviews that stick out to you, as of this point in your journey, anybody you care to comment on or care to kind of talk a little bit about their story?
I'm in awe of this guy named Larry Taylor, who is here in LA. Actually, he's he's been in LA real estate for, I think he wants to say 6 decades of LA real estate. I mean, he's in his 70s. But so he must have been a teenager when he got involved in his first deal. And what I learned from Larry is his entire play about real estate was about the tax implications, which was a totally unique way of looking at it. And I guess it's the way that super rich people always think about real estate that I now have come to realize is that, the real estate has had varying tax implications over the year.
Mm-hmm.
The thing that we are all most commonly aware of is the mortgage interest rate deduction, and the impact on Americans who are paying their mortgage and able to deduct the interest from their income tax. But there are so many other tax, I hesitate to use the word loopholes, but there are tax efficiencies and tax opportunities that exist in commercial and residential real estate and have done so for years, if not decades. And how those laws have changed, how Congress just changing a few laws in the way the real estate was taxed in the 1980s caused the savings and loan crisis. So a guy like Larry that has that kind of perspective is my favorite kind of guy to hear from. And I found that, it was a little bit more of a brainy interview, but that's the kind that I like.
It's great. All right. So I also understand you got some news happening here today. So First Lien NPL Opportunity Fund. Tell me more about this.
That's right. We actually this week just launched our second private equity private placement memorandum. It's a closed-end fund, Reg D 506C. I don't know if that means anything to anyone, but basically, if you're one of the 11 million Americans that is qualified as an accredited investor in America, you'll have an opportunity to join us as a limited partner in our fund, taking advantage of the various opportunities that we foresee coming in the next few years. Obviously, a lot of distress in the market, and so we do take accredited investors into this fund. We just opened it; it'll be open for all of 2023. We will be investing for a few years into distressed markets, and then closing that fund by the end of next year to new investors. And it's just one of the what I did in creating First Lien Capital was I left Wall Street money and been trying to use less and less Wall Street money and more friends and family, people that haven't normally had access to buying mortgages or taking advantage of mortgage arbitrage, which is really a high finance Goldman Sachs-y type of thing, and providing that opportunity to friends, family, private investors. And that's what First Lien NPL Opportunity Fund is. It's an opportunity to take advantage of the arbitrage that exists in buying non-performing loans and distressed mortgages. And so I'm excited that we're launching that. We just launched it this month. So
for those that have never, let's just say, taken advantage of their accredited investor status, right? So they're already accredited investors. In terms of investing specifically in something like this, like how does it work? I just want to keep it a little basic for a moment because I know that there's a lot of individuals, like you said, that haven't had access to this type of investment, even though they may be accredited.
That's true. And it's interesting because there are over, like I said, 11 million Americans that are accredited investors, and maybe one or two million of those have, either RIAs that get them access to private equity funds like this. But basically, what you're doing in our fund is it's $100 million fund. And so if you want to, you're buying shares into the company, and that company is only investing in mortgages and real estate. It's not paying for my operation. It's not paying for a company. It's not a tech startup or anything like that. We use those monies to invest directly into real estate and mortgages. So it's one of the safest risk-adjusted investments around. And you buy shares in an LLC that eventually, when that LLC wraps up, whether it's 3 years, 5 years down the road, you get your portion there back. Now, inside it, that's the high level way that to describe it. You obviously sign subscription docs. You get paid a preferential treatment. So we actually, as the managers of this fund, don't make any profits until the investors are paid back not only all of their principal, but a certain minimum preferential return, in our case being 8%. So we pay all of our investors their money plus 8% before we take any additional profits ourselves.
It's great. And so, Bill, I just have to say, so if somebody is watching this and they want to learn more, whether it's about First Lean Capital in general, about following your journey, your book, I mean, podcast, you got a lot going on. What's the best way for people to follow up and just to continue to connect with your brand overall?
Well, my company is firstleancapital.com, and spelled just the way, it is, at the screen below. But I also have a personal website, billbymel.com, BILLBYMEL.com, which can get you to First Lean Capital, but it also get you directly to purchasing my book, getting you to old episodes of things like you and me talking together, to my webinar series, my podcasts, and my contact information.
Fantastic. We'll put all of that information in the show notes. And Bill, again, I just want to say thank you for coming back on the show. Thrilled about launching this book, this collaboration with you, with all of these real estate leaders. I think we're going to have a lot of fun doing what we do, promoting, getting the message out there, and obviously wishing you, much more continued success with the podcast. I'm just excited to see you're on episode 20. We'll see next milestone, episode 100. We got some time there, but I'm looking forward to watching the show grow. Mm-hmm.
Sounds good. Let's do it. I love it, Adam. It's great to be with you.
Awesome. And to the audience, everybody watching, just want to say, hey, or listening in, thanks again for tuning in. If this is your first time with Mission Matters or listening to an episode, we're all about bringing on business owners, entrepreneurs, and executives, having them share their background, what they do, why they're doing it, and really the mission behind that. If that sounds interesting or fun or engaging to you, hit that subscribe button, because we have many more mission-based individuals coming up on the line, and we don't want you to miss a thing. Bill, until the next time, appreciate it. Thanks again for coming on.
Good to see you.